मुझे नहीं दिखा रहा अभी भी। मुझे क्यों नहीं दिखा रहा है? लिंक चेंज हो गया है? तो वो भेजिए लिंक, तो बच्चों को भी भेजना पड़ेगा ना। अच्छा, आपने कर दिया है?
Hello students, this is your channel.
ओके ओके। So first of all, sorry for this delay because some issues was there and we are not able to start the session. There was some issue in the YouTube. So I hope everybody is available right now. Means okay, fine. So in the last class, we was discussing about difference between small banks and payment banks, right? Small banks and payment banks, and few things. For example, initial capital requirement and eligibility criteria we have discussed. Now we today we have to discuss promoters contribution, foreign holdings, capital requirement, lending business, and maximum exposure. But before going to this thing, what I just want to let you know few things regarding kind of capital in the business. Capital in the business. First is means capital is this word is going to be used for the banks, for companies, financial market. That's why it is very important to understand authorized capital, right? What is authorized capital? And then one term is working Hmm. Paid up capital, right? So authorized capital, paid up capital, and working capital. These are the three important thing you must know before proceeding further. Even for RBI, when RBI was established, there was a paid up capital. So first of all, what is the authorized capital? To to start the business, we need some amount of money. Okay, everyone. So if there is a company, then it must follow Companies Act. Companies Act, right? Right now, Companies Act 2013. They have to follow Companies Act 2013. Okay, they have to follow Companies Act 2013, and under that, all the members of company, means those who are establishing that company, they will make it a kind of agreement. For example, 100 crores. 100 crore is going to be authorized capital. 100 crore is going to be authorized capital. This is the decision taken by the board of directors of this company, and this is mentioned in that company's constitution. If they said that ki 100 crore is going to be authorized capital, what it means that company company can sell shares of worth of 100 crores maximum, right? The maximum they can get it from the shareholders, that is 100 crore. This is not I'm talking about the valuation of the company in the market. I'm just telling about the company. When the company is going to be established, the authorized capital, it is 100 crore. That means through the selling of the shares, the maximum value of the shares of the company, the 100% shares of the company is 100 crore, right? Now, out of that 100%, suppose that 70%, right? Out of that 100%, 70% is going to be raised. So 70% shareholding is going to be available for the shareholders of this company. There are the three owners, A, B, and C. So they hold 30%. Now remaining 70% they are going to provide for their shareholders. This is before valuation of the company in the market, right? So that 70% is going to be what? Paid up capital. Whereas the daily requirement of a company, whereas the daily requirement of a company is known as working capital. On daily basis, whatever the amount of money do you need, that is working capital. Okay. So these three things you have to keep in your mind. Ayan Khan, sir, please explain merchant banks. I already explained merchant bank in last to last class. Just briefly telling you, merchant banks are those banks who are involved in selling and purchasing of securities, right? Securities both for debt and debt as well as equity. Though they also provide insurance, especially for export and import business, right? So they are involved in the equity, debt. They provide insurance especially for the export and import, and they do lending for businesses only. Means retail banking is not available. For example, if one company is going to purchase another company, right? So in that case, they maybe provide the fund on their own, or they may facilitate debt from normal public, right? So one way, for example, Facebook want to purchase WhatsApp. They purchased in 2014. So Facebook, either they have the money, they can pay that 19.5 billion dollar on their own, or they can take the services of particular merchant bank. So merchant bank, what will we do? Merchant bank will facilitate this 19.5 billion dollar on its own, or it will arrange debt for you, right? So this is the main way functioning of a merchant bank. Right. So this authorized capital, paid up capital, and working capital. Now come back to this differentiation. What we are doing on that means yesterday. Now, promoters' contribution we have to discuss. Promoters' contribution initially must be 40%. Whenever you are establishing a small bank, initially your contribution should be 40%, but it should be down to 26% over the 12 years. Why it is so? Not anything important I have discussed. Just I told you about the difference between what the different kind of capitals, right? What is paid up capital? What is authorized capital? And what is working capital? The amount with which companies establish, right? That is 100 crores. For example, in this case, this is 100 crore. That is authorized capital. What it means that if company is established with the 100 crores, right? So the 100% share value of a company cannot be go beyond 100 crores. That is the authorized capital. I'm talking about this. Okay, do one thing. Just leave this authorized capital, paid up capital, working capital. Those who just join or they join little bit late, don't worry. I will explain it later. I will explain it later again, because this point will come again. So I will explain it later. Just come back to this point. What we are doing in the last class, we did till then here about the financial institution. We have to discuss this promoter's contribution today. So I am discussing this thing. Just leave it. Whatever you have left because you joined late, I will explain it again in the fresh session. Otherwise, it will be create confusion. Those who have seen that, those who have not seen that. So avoid this confusion. I'll explain this thing again. Yogesh Chandrika, sir, please explain multi-state cooperative bank. Yogesh, it will come. It will come. From small bank, payment bank, I'll move towards RRBs, and from RRBs, the cooperative bank is the in the line. So I'll discuss with the multi-state cooperative bank, single-state cooperative bank, right? Scheduled cooperative banks. Cooperative banking is a separate kind of the complete structure, and while explaining the structure, things will be clear. For example, when I was explaining this thing, I made this structure. If I didn't made that structure, just give me a second. See, banks, scheduled banks, right? Scheduled banks, non-scheduled banks, right? So under the scheduled banks, SCB, scheduled commercial banks, or here scheduled cooperative banks, right? So when I say scheduled commercial banks, it is public sector banks, then private sector banks, RRBs, local area banks, right? And then it is small banks and payment banks. So when I draw this figure first time, I only mentioned public sector banks, private sector banks, and LABs. I have not mentioned about RRBs, small banks, payment banks, right? Because they are the innovation over the time. So uh, first, I'll explain this thing: scheduled commercial banks. Sorry, this small banks and payment banks. Then I'll come to the RRB. Then I'll come to the means LAB. I already explained you. Then I'll go to this cooperative bank structure, and then it is going to be open and wide. And within the explanation of the structure, most of the things are going to be clear there only. No need to get further details. So just wait. I'll come to that point. Fine. So let's finish it first. Finish it first, then we will go to other things. So I was telling about the promoters. Here the promoters initially they must have 40%, but gradually they have to reduce it to 26% over the 12 year. Whereas here in the payment banks, because the nature of the payment bank is what? The nature of the payment bank, they are not going to accept huge amount of deposits from the public. So there is no need to bring down the promoters contribution. Here the promoters contribution is deliberately should be decreased to 26% because as small bank is going to expand its business, small bank is going to have more and more public money. And because if public money is there and the promoter who already have 40% means extraordinary influence over the bank's board. So it is very required he must decrease his shareholding so that he cannot unnecessarily influence the functioning of that board. So that is why here the condition is being put, you should be having only how much? You should having only 26% maximum, right? Acha. If you will see here, promoters contribution initially must be 40% for first 5 years. So here they have not put any condition, but they said that must be 40%. Why must be 40%? Because these payment banks are basically providing the payment services, right? They are basically providing the payment services. So if the services are not going to be work in the proper manner, he or the person who is a promoter must be held responsible. So that is why RBI is emphasizing here must 40% for first 5 years. Right. So first 5 years, even after the 5 years, also there is no change. They must have 40%. Even there is no change, RBI still stick on that thing. Must have 40%. Fine. Now come to the foreign holdings. Foreign holdings up to 74% of paid up capital of paid up capital or and par off with the private bank. Here up to 74%. Can you tell me what is the limit of FDI in the public sector banks? FDI limit in the public sector banks? Anyone? Limit of FDI in the public sector banks and in private sector banks? Are they same or different? Are they same or different? FDI limit in the public sector bank? 49% in the public sector bank or private sector bank? Come on, why you people are taking too much time? Answer. 25 to 30%? What it means that 25 to 30%? What is FDI limit in public sector bank? Private sector bank is 49%. But what about the public sector bank? Is it 20%? Hmm? Acha. So if it is 20%, do you think any Pakistan-based foreign institutional investor is able to invest in India's public sector bank up to 20%? No, they cannot. So when we talk about the FDI, acha, just give me a second. I'll tell you. When we talk about this FDI, foreign direct investment, institutional investors and individual investors, right? So the percentage of share in terms of FDI, it is decided by whom? Government. Government have a discretion to decide how much FDI can come to our country, right? That is going to be decided by whom? That is going to be decided by only government. Fine. Whereas amount, how much amount in a financial year? In a financial year, how much amount can be come to India by any institutional investor or by individual investors? That is going to be fixed by whom? Reserve Bank of India under FEMA, right? Under FEMA. Fine. So first thing, FDI, foreign investors, right? Foreign investors, institutional investors, individual investors. So how much percentage of FDI can come to our particular bank? That is fixed by whom? That is fixed by government of India, not state government, government of India. Whereas amount in a particular financial year, it is fixed by whom? It is fixed by Reserve Bank of India. Now, one more thing. Investor who can be considered as foreign investor. Who can be considered as a foreign investor? Who will decide? Government or RBI? Tell me, who will decide? Who will decide who can invest in India? Government will decide or RBI will decide? I'll take a sip of water. Tell me. Saurabh, government, Samarth, government. Yogesh is saying that RBI. Yogesh, you are working in the bank, right? What are they saying? So Yogesh is working in the bank and he is saying that RBI, and all others they are saying that government. Still, anyone else want to answer? Who will decide who is going to be the investor? Anyone else? Okay. Nikki is saying that government. Okay. Acha, IT sector. Okay, Yogesh. Sorry. IT sector. Fine. Hmm. Okay. See, so because some people are saying at RBI, some people are saying that government of India. So I am going to be little bit political this time. I'm not going to say you are wrong. I'm not going to say you are right. Right? I'll say both. Both. Now, question arises how both can decide. Actually, in a law, for example, in a law, right? So, law is written. For example, the simplest example: traffic police. Traffic police constable, he is authorized to make do the challans, right? So the power to go for challan is given by government of India to traffic police, and under the traffic police, who is going to cut the challan and who is not going to cut the challan, and what amount of challan can be cut by who, right? Who is responsible, who have the power? So this is the administrative law. One is what? One is a legislative law and one is an administrative law. So parliament made the law that this thing can be done by traffic police, or state government has made the law this thing can be done by the traffic police. Fine. And after that, administrative power is being given to the superintendent of police, or that administrative power is given to the commissioner of police, who is going to give this power to their officers and other police personnels, right? So similarly, in this case, who will decide who is going to the investor? Government has made a law, and under the law, government has given power to RBI, right? So government has given power to RBI, but few things has clearly mentioned by the government कि these people cannot be considered as an investor. So for example, government has mentioned that कि people coming from Southeast Asia, like Afghanistan, Pakistan, Nepal, Bangladesh, Bhutan, Sri Lanka, right? So government has mentioned that कि if these people are going to invest in India as a foreign investor, so RBI have to take these guidelines. RBI have to follow these guidelines. For rest of the countries, RBI have to follow these guidelines to enable them and give them functional power to function as an investor in India. Right. Now, one more thing, for example, government securities. So, government securities, who can invest? Till then, now in government securities, only resident Indian. Only resident Indian can invest. Foreign institutional investors are not allowed directly to invest in the government securities. Right. So who is going to allow them? It is going to be allowed by government. Government is going to allow, or government can refuse participation of foreign institutional investor in the government securities, right? So what government is going to supposed to do? First of all, government has made up its mind ki, okay, we will allow the foreign institutional investors to participate in the government securities, but to make it proper and functional, RBI is being awarded with the certain powers. So what government is going to say that ki we are going to allow foreign institutional investors to invest in the government securities. However, how they can invest, how they cannot invest, what amount they can invest, that will be decided by Reserve Bank of India under the guidelines issued by RBI time to time, right? So in this way, both have this kind of the power. But if question will come, choose among these two, in four option it will come, and the question is like who have a power to decide the definition of foreign investor. Then it is not RBI, it is Government of India. So defined who is an investor, it is defined by government only. Government allow RBI so that it can function smoothly, right? And RBI do not have a power to override government law, right? And because government is making the law through parliament, so whatever the law is coming from the parliament by the government. So keep this thing in the mind. Fine. So definition of institutional investors or foreign investor, it is decided by whom? Government of India. But under that law, government may enable RBI to decide certain things. Clear? This point is clear? Okay. So let's move further. We will go back to again this point. So regarding foreign holdings, now capital requirement. Minimum capital adequacy ratio. Capital adequacy ratio is what? Capital adequacy ratio, certain amount of money you have to put in your reserve. As for right now, because capital adequacy ratio will come under the Basel Committee and banking reforms, it will come there. So I'm not going to deal here in the detail. Just a certain amount of your tier 1 and tier 2 capital you have to keep with yourself. That is what? That is capital adequacy ratio. And here it is very high, around how much? 15%. So capital adequacy ratio requirement for those people who are means think this can be asked in where. So it is a kind of question can be asked in tier 1 part under GA. Capital adequacy ratio. Generally they will not ask directly, but if because of any reason, if it is going to be in the news, if government is going to think to increase or decrease, then it can be a potential question in your exam. Right. So here you can see the capital requirement is what? Here must maintain CRR, right? Must maintain CRR minimum 75% of demand. I told you na, CRR and certain amount of CRR must be maintained, right? So for banks, for normal banks means public sector banks and private banks, RBI have a complete discretion. RBI have complete discretion. Even RBI can make it 60% to 99% or even 100%. Right. So RBI have a power to decrease it to 60% or even 40%. RBI have complete power. Right. Whereas here it is clearly mentioned for these banks. For these banks, what? Payment banks, CRR should be there minimum 75% of their demand deposit. Right. And again, 1 year and maximum 25% in current and fixed deposit. Right. So here for this payment banks, CRR requirements is very clearly defined. Very clearly defined. RBI have limited power, whereas in the public sector banks case, RBI have wide range power to fix what amount of CRR bank should maintain on daily basis. But here you can see that for payment banks, already things are mentioned very clearly by the government of India when they have given this terms and conditions for the payment banks, right? Now, lending business. Lending business restricted to small businesses, marginal farmers, priority sector lending, target 75%. 50% of the loan must be those for up to 25 lakh. See, what was the objective of small bank? The objective of a small bank is to increase the financial inclusion, and the priority will be given to those people who want to establish a small bank. The priority will be given to those who are going to establish their bank in the unbanked area, right? So the objective is to cater the requirement of unbanked area, right, where the farmers or small kind of businesses are there. So that is the priority for small banks. So that is why it is mentioned here, restricted to small businesses, marginal farmers, priority sector lending. What is priority sector lending? I'm just going to explain. So it will be clear for you, but your lending is not as wide as like public sector banks, or even it is not wide as a regional rural bank. So it's limited. Whereas if you will see the lending business, they cannot lend. They do not have the lending power. They do not have a lending power. So can they issue the credit cards? Payment banks, do they have a power to issue the credit card? Do they have the power to issue the credit cards? Payment banks? No. Why? Because they are not allowed a lending business. So credit card is kind of what? Providing the credit in advance. So they cannot. Fine. So reasons is very simple. They can accept the deposit. Can they issue the ATM card or debit card? Can they issue the debit card? Obviously, because they are accepting the deposit. So automated teller machine card can be provided, debit card can be provided. So, acha. Now, question is, can they provide EMIs on? I'll write here. Can they provide EMIs on debit card? Because right now many banks are providing the EMI on debit card also. Can they provide the EMI on debit card? If yes, why? If no, then why? If yes, why? If no, why? You have to answer me with the reason. Question is, can payment banks provide EMI on debit cards? No, I'm talking about payment banks directly, not other services. Not other services. I'm talking about themselves. Only two, three people. Where are the rest of the guys? Why you are not answering? Not watching the lecture? They cannot. EMI means kind of loan, right? So if you are restricted, you are not allowed to do the lending business whenever you are deducting the money, right? That means EMI means equated monthly installment, right? So you are going to charge an interest rate, right? You are going to charge an interest rate. Maybe you can say that we will provide the zero EMIs, but it is still equated monthly installment, which is a feature of what? Which is a feature of lending kind of business. So you are not allowed, you can't do on your own, but yes, with the financial institutions like services like Bajaj Finance, what Samath was saying, he's right. You can do that with the financial service provider, but not on your own. Right. So this is why what happened in India during the lockdown. During the lockdown, lot of lot of these app means the lending applications were flourished in India with the help of these payment banks. They get the data from the payment banks, right? And they started doing their business through applications, and they are charging very high interest rate. Some people even have committed the suicide, because if the people are not able to repay, then they started humiliating. So in that kind of the case, the biggest role was played by whom? The payment banks platform. Payment bank platform was largely responsible. So RBI have taken certain action, and most probably in the budget by next 2 3 months, RBI also coming with the wide guidelines in such an area. Okay. Fine. So this thing is clear. Payment bank and small bank. Okay. Now we was here. Hmm. So public sector bank structural things clear. Private sector bank structural things clear. Small banks and this payment bank LAB. Also, I already explained you what is the LAB, local area bank. Now it is RRB, right? RRB, regional rural bank. Regional rural bank. So one question is, sir, then why RBI includes payment bank in second schedule? What is the purpose and why they need services and security provided by the RBI if they don't lend? They don't lend, but my dear, they are providing the deposit services. Means they are accepting the deposit, maybe restricted, but still they are accepting the deposit. Number one. Number two, the reason is they are also forced to maintain the CRR. Right? They are also forced to maintain the CRR. So this is the see being a part of second schedule. Being a part of second schedule, it only doesn't mean that ki you have to fulfill certain terms and conditions. Being a part of second schedule means you must have to fulfill certain terms and conditions. If you are fulfilling, then the doors are also open for you to get liberalized or means low interest rate money and other facilities. But for that you must have to fulfill certain terms and conditions. So it is like both. It is like having both. If you are going to be the part of second schedule, you must follow certain terms and conditions, and with certain terms and conditions, some of the better facility is going to be available to you which is not available for non-scheduled banks, right? But as in this case of payment bank, because they have to maintain the CRR, so that is why certain facility must be provided to them, so that is why they are in the second schedule. LABs, I told you in the last class, what for particular area, for three districts which are interrelated to geographically, right? For their local needs, for their specific local needs, I have given the example of Guntur, where the chili production is there. So to promote the chili production, for example, Malihabad nearby Lucknow is famous for mangoes, right? So for particular area, there are a lot of local businesses are there, right? Geographical indicators base means there is a geography, and that geography, particular geography, is famous for what? Particular good, right? So in order to promote that, you can establish local area bank, and that bank have a limitation. It can work only in three inter means connected districts. This is all about local area bank. Okay, including second schedule enables the payment bank to work in the foreign exchange. This may be, see, this is one of the reason, but that is not main reason. This is not main reason. So you can write it there, but the main objective is what? The main objective is to function properly, and function properly means you have to follow certain terms and conditions which must be followed by the scheduled commercial banks and other banks who are in schedule 2, right? Other part is what ki whenever you need any kind of the requirement, we are able to help you directly, right? So it is kind of give and take relation which is offered by the Reserve Bank of India for scheduled commercial banks who are in schedule 2 and other banks who are in the schedule 2. Okay, now come to RRBs, regional rural banks. So for regional rural banks, let's go to this PDF directly. So I'll first explain you the background. As you know that in 1969, in 1969, nationalization war of banks was started. What was the reason of the nationalization of the bank in 1969? We know that before Niti Ayog, we have what? Before Niti Ayog, we have Planning Commission, right? Planning Commission was there, and Planning Commission was responsible to create and execute long-term development plan in India. And first 5-year plan was from 1951 to 1956. Second was 56 to 61. Then third was 61, sorry, 61 to 66. Then 69 to 74. 69 to 74. So this phase 3 years of plan holiday. This 3 years was a plan holiday because 1962 war, then 1965 war, and again 68 severe drought in India. Severe drought in India. So India was not able to implement any 5-year plan in India. And when we have implemented this plan, and after that this plan was implemented, performance was not up to the mark. Performance of plans was not up to the mark, and there was a lot of introspections what we are not able to do it properly, what we are not able to do it properly. So a lot of government officials, they have suggested that ki madam, means Indira Gandhi was the prime minister, we have a crunch of credit in India. A lot of private banks are there, but we cannot use or tap their deposits for proper functioning of the government. So under that, they went for nationalization of the bank. One shot nationalization, 14 banks were nationalized. So even after the nationalization, you got an excess. You got an excess uh, of banks' money, nationalized banks' money, because they are property of government of India from 1969 onwards. So you know, earlier you was creating we do not have a funds. Now you have a funds because banks are in your control. But the problem is how to effectively utilize those funds. How effectively utilize those funds. And those banks who are working there in India at that point of time, they are not able to cater the requirement of agri, come, rural sector. Rural sector, because operating a bank in rural area and providing the loans highly vulnerable. Why agriculture is highly vulnerable because it is completely dependent on the monsoon. So if monsoon is going to full, farmer is not able to pay your money, so it is highly vulnerable area. So banks are not interested to give the loan, number one. Number two, operating the banks in the rural area, it's going to be little bit what, little bit problematic, because it is going to be non-profitable, or it is going to be the loss kind of the business. But there is also need to provide banking solutions there in order to uplift that sector, right? So in India we have what, federal structure, where there is union government, state government, and local government. So government of India, in consultation with all states under this planning commission structure, government said that, see, the development of rural sector and agriculture sector is not only our responsibility, you also have to take certain responsibility, because for banks themselves it is not possible to do the business in that area, because it is highly non-profitable and loss-making business. So whatever the loss is going to be taken by a bank, it is appropriate we should take certain losses on our own, right? So we must function with the banks in order to fulfill the requirement. So that is why a kind of model was required, so that banks, union government, and state government both can participate to uplift rural banking requirements, right? So this was an objective, and you can see that Narasimhan working group of 1975. right? So that working group of 1975, they suggested kind of the structure where bank, union government and state government can also participate, and because three partners are going to be there, so it is better to pass a law, and law was passed and regional rural bank was established. And first was on the birthday of Mahatma Gandhi. The main reason why 2nd October, because Gandhi is always a believer of what? Gandhi always believed in the rural economy, right? He always pushed that if you want to make India develop, first you should focus on what? You should focus on decentralized way of economy. Decentralized way of economy rather than top to bottom approach, it is bottom up approach. Top to bottom means industries, we will cater the industries, then automatically growth will come to the other sectors. Bottom to top means the grassroots level should be focused and automatically it will reach to the top level. Fine. So this is why 2nd October was chosen, because the bank which is going to be established, that was for the purpose of what? That is for the purpose of Grameen people or village people, and Gandhi was a staunch supporter of that. Okay, so at present, how many? Total 43 RRBs, and right now, what is the shareholding? 50, 35, and 15. So central government, concerned state government, and then sponsor bank. Sponsor bank means what? Regional Rural Bank, RRB. RRB is a separate entity. RRB is a separate entity, right? Means it is going to be created as a separate entity. For example, XYZ RRB. So XYZ RRB, who is the sponsor? Sponsor is, suppose, SBI. So SBI is going to have 50% holding in this bank. The state government, wherever the bank is going to be established, suppose that in Punjab. In Punjab, then it is going to have a 15% shareholding, and this 35% is of State Bank of India. So in that way, it is a kind of joint holding company, right? So RRB combines the characteristic of cooperative in terms of familiarity of rural problems, and commercial banks in terms of professionalism, ability to mobilize financial resources. RBI operates within the local limits as notified by the government. Local limits means what? For the particular state, they have to work in the particular area, and they can lend in that particular area only, not beyond that. So in that way, local limits are being there, right? So bank is going to bring the professionalism, and government and state government, they are going to facilitate the rural economy requirement. So that is why it is being there. Fine. Game killed. Come on, my dear, be mature. Why you are making these comments? Be serious, right? No need to go beyond the requirement of this lectures. Okay, others leave it. Just focus on the lecture. Okay, next point is the main objective of RRB, right? So rest of the thing, whatever is mentioned here, right, that is related to what? That is related to objective of RRBs. So main objective of RRB is to provide credit and other facilities, especially to small and marginal farmers. What is marginal farmer? And what is the need to differentiate them, small and marginal farmer? Sort of, see, if in any bank apart from PSB, they know that government, even they are not willing to be the part of this RRB. The truth is, they are not willing, but because they have the holding or government pressure, then they have to be the part of it. Private sector banks and other banks who are in the banking arena, they are here to make a profit. So obviously, until unless government is going to cross subsidize, ki, okay, you have to do your services here, we will give you the leverage in other areas. No other bank is going to involve in this kind of the business. Less than 2 acre banks, they are what? They are small farmers. Acha, I'll give you an example. All of you know that who are the marginal farmers, but I hope you are not getting this point. Agricultural laborers, artisans, and small entrepreneurs. So, who are the marginal farmers? Suppose that A is a person living in Delhi, right? And he have his farmland somewhere in UP, right? Somewhere in UP, he have his farmland, right? But because he is working here, so he is not able to go and do the farming. So what he did, he gave this land to person B who stay in the village only. So you have given this land, right? And you told that ki whatever the income will generate from this land, I will take 70%, 30% you can take, or whatever the ratio is going to be decided between them, A and B. So this land belongs to A, but who is going to do the kind of contract, unwritten contract farming, that is done by B, right? And he is going to do this entire farming. He is going to put all his money, and because he is a owner, so he is going to take the chunk, and he is going to also take the chunk. That ratio depends. That ratio depends, right? I'm not going to in that ratio. What I mean to explain you that he is what? He is a marginal. I'm back. So who are the marginal farmers? Things are clear. Small farmers having land holding of less than 2 acre or up to 2 acre, and marginal farmers, we only means generally we consider marginal farmers are those farmers who are indulged in the farming activity, but technically they do not possess the land. A know that ki without B I can't get anything. So A is a owner, but by default, who is doing all this agriculture activity? B in this land, right? So B will be category of what? Marginal farmers. Okay. So objective is bring to the credit gap in the rural area, right? Checking the outflow of rural deposits to urban area and reduce the regional imbalance. So how means, see, if you are not going to get proper opportunity of doing your employment, then definitely you will move towards where? You will move towards the urban areas, right? And if you will move towards urban area, whatever the savings you are going to save, you are going to put in the urban banks, right? So to stop the movement of that savings to urban centers, RRBs are also going to be very effective. That is why it is mentioned here. And again, increase in the rural employment. Fine. Now the next point is RRB have also been bought under the ambit of priority sector lending. What is priority sector lending? I'm just going to take this point after explaining all these RRB features. I'll take this point and I'll take this point in detail. Right. So just wait. So priority sector lending. So this point I'll explain. Just hold on. First finish this part. As a part of guidelines, domestic banks have to ensure 40% of their advances accounted for the priority. Again, this point is also related to priority sector. I'll come back here. Now, this point, RRB. This point is highlighting the problem faced by these RRBs. Right. So this point is important. You can have this point in your mind, right? So RRBs have been finding it difficult to maintain the minimum capital to risk weightage assets ratio, right? CR, AR, we will discuss later, but it is a kind of thing which you have to maintain out of your capital. So this high 9 point is very difficult for them, right? Because it is at least 9%. Dr. K.C. Chakraborty committee recommended recapitalization support to extent of 2,200 crore to 40 RRBs in 21 state. This recapitalization process started in 2000, means already 10-year over. Already 10-year over, but still problem is remain same. On recommendation of K.C. Chakraborty committee, this process was started, but already means sorry, even after this process, problem is still there. Problem is still there. RRBs are functional, they are working, but they are not able to effectively function because they have to follow what? They have to follow terms and conditions, stringent terms and condition. Number one, that is CRAR condition. Other thing is that you have to follow the banking rules and regulations. Obviously, you have to follow. But the point is the rural population. Rural population. Rural population. Is it working? Yes, I am visible. issues again. Okay, okay, fine, fine. So what I was telling you, what problems is still faced by these regional rural bank is these regional rural banks are facing lot of issues, and the primary reason is rural population because of low level of income, low level of literacy, right? And their ability to understand the thing is not as good for these kind of banks rules and regulations, right? So in the villages you will find more informal kind of the thing rather than formal kind of the thing, right? So in villages people hardly will go for settlement in the court. The most of the time panchayat is going to decide most of the things, right? So most more informal nature of rural India is one reason. Literacy, low literacy is the other reason. Third, and one of the most important thing which you can mention if you are going to get this question in exam to write in the descriptive, lack of role model. Lack of role model, right? When this scam series was launched, then somebody want to become a Mehta or somebody want to become a Junjunwala, right? So immediately, even if the negative character is being idolized by the people and they want to be like them, right? They imagine people want to become a Thanos, people want to become a professor, right? Money heist, right? People want to become Harshad Mehta, but how many of you are interested to become a Ratan Tata? Right. So still, maybe some people are aspiring to be a Ratan Tata. He is a kind of not only just entrepreneur but philanthropist also. But the point is, what I am trying to mention in India, the success of person who is coming from the rural background while doing the rural activities like agriculture, his success is not uh, being framed by media, social media, government, all are the held responsible. They are not creating a role model from there. If you will create a role model, how the role model are being created? These awards are also one of the way to create a role model. Government can award, social media can incentivize, news and media houses can incentivize, this movie means those who are Bollywood or some other areas local movie making process, you can also make a movies on them. So in that way you can create a role model, right? People have the Elon Musk as a role model, right? So the reason why Elon Musk and all other these people are in US, the main reason is that there they have role model, what they have role model of their own field, right? So this is one of the reason why rural India lack in these things, because we do not have a kind of role model kind of people who how many of you know Mahendra Singh Tikath? Maybe because Rakesh Tikath, you know Mahendra Singh Tikath, or maybe most of you don't know about Mahendra Singh Tikath. You don't know about Mahendra Singh Tikath. Maybe you know Rakesh Tikath and you can relate Rakesh Tikath to Mahendra Singh Tikath. But most of the people don't know. I know. Mahendra Singh Tikath was one of the farmer leader who was a epicenter, who was an epicenter to put the demands to voice of the farmers in front of the government in very effective manner, right? Very effective manner. But he always distanced himself from the politics. Always distanced himself from the politics. It is government versus farmer group. When Mahendra Singh Tikath was there, right? So government never allowed to be him a kind of what? A farmer leader, right? A farmer leader come role model in India. Why? Because they are the pressure group and they put government on their toes, right? So this is It doesn't matter whosoever is in the government, it doesn't matter which party is in the government. This is the nature of political power, right? So since 1960s, these people came in forefront, but they are never being recognized as the role model. So this is one of the reason why the agri based economy in the rural area is not able to flourish, apart from other reasons. So other reasons you have to mention whenever you are writing the answer. You must have to mention another reasons like literacy and other things. But what the role modeling I am explaining you, you can write this thing in the concluding remark so that it going to be very effective. Because conclusion of the answer should be little bit more philosophical in the nature, then definitely it is going to create a good impact. That's why I'm asking. Acha, yesterday I have given a question, but nobody has wrote the answer. Role model is very simple. When you will see a movie like Gangajal, you want to become a police personnel. Whenever you will see someone and he is going to inspire you to be like that, he's a role model, right? Who's a role model? The person, after looking his activities, his success, you want to be like him, right? You want to put yourself in his uh, position. That is role modeling. So it is being inspired. So you can use in any area, means failure of industry, failure of agriculture sector. You can write this thing in any of the conclusion of the answer. Okay, so RRB I have explained one few things, means this part, capital to risk weightage assets ratio. This thing I'll explain in the next class. And actually I was having this PDF to discuss priority sector lending, but the problem is time is already over and it's little bit late today. So I'll start discussing this priority sector lending tomorrow. Okay. I'll answer this question once I'll complete this priority sector lending. I'll answer Yogesh your question, LAB and RRB. Right. I'll answer your question. So for today, I'm winding up. Tomorrow we will discuss. Okay. Okay then. Bye.